Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, navigating the downtrend. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Now, again, you guys know these videos are not fun to make, right? I don't have joy in coming on and talking about a Bitcoin downtrend, but I also think it would be doing you somewhat of a disservice if I just disappeared and did not make any videos. And so I did want to talk about strategies to navigate the downtrend. All right, and some of these strategies are strategies that I've used before. Not every cycle I use the same strategy, but I want to talk about different strategies and the merits to them, the disadvantages to them, and then that way you can hopefully pick out one that works for you. All right, so the first thing is sort of the cliche buy the dip, right? And it's easy for people to exclaim that, I know. People have been saying buy the dip, for a long time. And I imagine if we were to fast forward 10 years, they'll be right. I imagine if we were to fast forward even potentially a year, they could easily be right. But in the short term, it can be somewhat detrimental to investor sentiment to buy the dip, because what if you buy the dip and the dip keeps on dipping? You might run out of chips to buy the dip with, and so one of the mentalities that you'll see is that when people say buy the dip, it does work out in the long term, okay? Because when you just looking at the chart for Bitcoin, we do generally trend up with time, right? We know that we generally trend up with time. The challenging part is, if you buy the dip, let's say here, and then you feel like you're king of the world right there, and then you buy the dip here as well, and then if it goes down a third time, you probably you're just so done with it, right? You don't believe it anymore. People just keep saying buy the dip, and then you capitulate, and you're partially responsible with the other investors for causing the final capitulation wick before we actually start moving back up. All right. Same thing back over here. You can see the buy the dip mentality is sort of, it's certainly hard when you buy the dip, and then you get another dip. And then by the time you get to this point, a lot of these people no longer want to buy. Also, 2019 is a good example, right? Like buy the dip. By the time you get to here, the people that bought this dip, they're beyond frustrated. They really don't want anything to do with buying this somewhat BS dip mentality. And then they actually miss out on the actual major opportunity. And then even in the summer lull, right? I mean, you could argue back then it wasn't nearly as brutal, right, as some of these other ones, but by the dip here, we went back to 41K, and then we still kept coming down, and we kept slowly bleeding. And so now we're sort of in a similar phase where, the mentality is, we'll just buy the dip, and then what if the dip keeps on dipping? So, the people that are buying it over here, and then they maybe also buy it over here. What happens if we get, another third dip that's even more brutal, and that would completely shake retail? Whatever's left of retail could be completely shaken out by that point. So, one of the things I wanted to mention is, if you have the capital and you have the timeline, meaning you don't need the money in the next month or two, and ideally you don't need the money for a long time, or you just don't need it, right? It's just money you don't need. Then I don't think there's anything wrong with going with the buy the dip approach. The people who bought during the summer lull, I mean, of course they were schmucks for a long time. I was one of them, right? I mean, it just kept going lower. And then eventually we came out of it, and then eventually buying the dip, looking back on it, it made a lot of sense. Right? But during the time, it doesn't always feel like that. Back in 2019, after that run up to 14K, it was sort of like buy the dip mentality. And then, we all felt king of the world right here. It was going back up. And then what happened, right? Like the pandemic hit, and we just went all the way back down. And then so many people actually missed out on this opportunity. Not necessarily because they didn't have the capital, because maybe they did. It was just, you just become somewhat disillusioned with the idea of buying the dip. Okay, so if you do want to take a DCA strategy, which I do think is a valid strategy to take, just sort of recognize that we're going to be here for a while. Okay, it's going to be several months at the very least, I think, before we can rally back up. And some people have asked me for a general timeline on that. Look, I've said before, I don't really see a parabolic rally in Q1. That's clear. That's clear at this point, obviously. But I could see investor sentiment continuing to dwindle for a while. And look, I mean, we can still have moves to the upside, but even if it pulls back, investors are just going to retail investors are just going to get frustrated with this market. And so, the whole idea, of course, for this cycle is Bitcoin to 100K, right? Bitcoin to 100K. I have to imagine that by the time Bitcoin actually gets to 100K, a lot of you guys won't be here in crypto, to be completely honest, right? Like if you are still here now, you're probably doing, you've probably stayed longer than 70% of the people. I mean, I look at the YouTube stats on my channel. I see that a lot of people have left. It's not that complicated to realize that a lot of retail investors have completely moved on, and they're looking for something else. They just become tired of what's going on. So I think one thing to think about, though, is that by the time Bitcoin does get to 100K, most people will not have ridden it up. Why? Because they probably would have capitulated at much lower prices. And furthermore, one of the things we do know is that whenever Bitcoin gets to the prior all-time high, it moves quickly. Okay. Now, this time when Bitcoin gets to a new all-time high, it'll have to go to 70K. Once we get to 70K, I mean, 100K is not that far away. So you have to imagine that at that point, the market would move relatively quickly, and most people would actually miss out on the move to 100K. But in the short term, what are the potential implications here of this sort of buy the dip mentality? Well, if you have limited capital, right? If you have a very, very, very limited capital, and let's say you just have a nominal amount of money that you either want to put into the market, or you don't have any money, you don't have any money to put into the market. First of all, if you don't have any and you need the money, then by all means, there's nothing wrong with taking profits. Okay. I mean, again, I'll say that again just for people in the back row. If you need the money and you cannot wait this thing out, then there is nothing wrong with taking profits. Okay. Altcoins, a lot of them are still up significantly. And if you need to skim some off the top to help yourself get through this phase, there's nothing wrong with that. So don't let anyone tell you that there is. But one of the things we can look at, and we've looked at this before, are the Heikin-Ashi candles. And so if you're not really interested in the DCA approach, right, like the dollar cost average, you put money into the market every week or every month, no matter what's happening. If you're not really interested in that approach because you have a very limited amount of money that you want to put in, then one of the things you can do is just wait for the downtrend to be over. And one of the ways we might be able to look at that, at least locally, again, is looking at the Heikin-Ashi candles, because right now they're still painting a very bleak picture. Okay, going back to normal candles, you can see that it certainly seems like there's these sideways ranges. But what you'll notice is during the first half of this range, we spin it in the top part, and during the second half of this sort of timeline over here, we spin it in the bottom part. So while technically you could argue that it was just a sideways region between, say, 30 and 40K, investor sentiment was dwindling during that time. And you can, I think, very easily see that with these Heikin-Ashi candles. And you can see that it was just going down and down and down and down and down, and then finally we started moving back up. So one way you could look at the market is to just say, well, as long as this downtrend continues, as long as we're getting weekly close after weekly close, where the Heikin-Ashi candles are just showing a downtrend and deterioration of investor sentiment, then you could just simply hold off until we see an uptrend, even if it means missing the bottom, right? Even if it means missing it. You don't have to actually catch the bottom to make money in crypto, just like you don't actually have to sell the top to make money in crypto. I mean, even if someone bought Bitcoin at $5,000 in 2019, they're still up significantly right now. So one way you could look at the market is to just say, all right, you already have a lot of money in. If you already have a lot of money in, and you're watching this thing bleed, you don't need the money. You have some cash, but you'd like to wait for a better time. One strategy is just wait for the downtrend to be over before you allocate more capital. or allocate that capital in maybe a different asset class that doesn't look quite as bearish here in the short term. Okay, so that would be another strategy. Another strategy potentially to complement that strategy would actually be waiting until Bitcoin gets above the bull market support band. Okay, so like right now we're still well below the bull market support band, and until we get back above it, the market can still seem relatively bearish. All right. Now, of course, if you wait for that, you'll definitely miss the bottom, right? I mean, there's no way you can time the bottom correctly if you wait until we're above the 20-week SMA. But that's not necessarily a bad strategy for people, right? Just waiting until sort of the downtrend is over. And so I mainly say this to people that have already put in a lot of money. If you're new to the market as of 2022, then I would see nothing wrong with just getting a position in Bitcoin and dollar cost averaging for the next 1 or 2 years and waiting. If you've been dollar cost averaging into Bitcoin for the last 1 to 2 years and you're more or less at break even because you've been buying at 30K, you've been buying at 50K and 40K and 60K, if that's you and you're more or less right around your cost basis, then there's nothing wrong with just waiting. If you don't want to DCA and do the cliche thing of following the buy the dip mentality, okay? And one of the things you could do is just simply wait for the downtrend to subside, okay? So I know a lot of people are putting a lot of hope in 40K holding. I hope 40K holds as well. I mean, I do. I hope it holds. There's certainly a decent chance that it does hold, especially going back to the to this mentality of this, right? Like kind of coming back down to where we held that last local bottom before the move up, and then seeing something kind of like that, right? So there is some merit to that idea. I'm not saying there's not, but I also know that the crypto markets can be absolutely brutal as well. Especially, to retail investors, it can be absolutely brutal. And it has a way of making you redefine what is possible and what is not possible. So the idea that we can't go below 40K is not a good idea to have. It could happen. And if it does happen, then the 30 to 40K range becomes very much on the table. And then you have to consider possibilities of emulating what the stock market did back in the 2000s, right? You had the dot-com bubble, you had the financial crisis that started there, right? We came down, we had a top, we had a double top, we came down, we put in a new low, and then we rallied. And then you see kind of what's happened with the stock market ever since, right? It's just continued to rally on up. But it was a brutal time to get through. And so if Bitcoin were to do something similar to that, if 40K doesn't hold, let's say it comes down to 40K and then we actually get a bounce, something like this, and then we end up coming down, or maybe it's a little bit of a whimper type bounce and then we come down like this, you should know that, if whatever remaining retail investors that are holding on to some remnant of hope right here, I can't imagine they're going to have it down here, okay? And so if the market were to do something like this where it comes down here and then starts going back up, I guarantee you no one's going to believe that pump. If it goes even lower and does something like the stock market did back in the 2000s and then goes up, I guarantee you no one's going to believe that pump either. No, simply just no one would believe it because they would have been too tired of watching the entire market just go down for so many weeks or months in a row that no one would actually believe that pump at all. Just like you could argue back in the stock market, no one believed this one. And some people have said, well, you can't assume that Bitcoin has to copy the stock market. Of course not. I don't think that Bitcoin will do exactly what the stock market did back here. I don't think, there's still a good chance Bitcoin holds 40K. The point is that we can learn from prior investors in markets to understand how those investors felt. And we can at least understand how these investors felt back in the stock market during the 2000s, right? Because what we saw was, it took a lot longer than it is for Bitcoin, right? Rather than being spaced out by Bitcoin of 6 months, this was spaced out by about 7 years. So a much longer time frame. Bitcoin is sort of finding its fair value, or it's going to wherever it's going to go a lot quicker, I think, than the stock market. But you can learn something from them. So imagine we're looking at Bitcoin today and saying, well, let's hope 40K holds. If it does, we're potentially talking about another one of those Wyckoff accumulations that everyone loves talking about, right? And then we trend higher. But if it doesn't, retail sentiment is going to be completely shot. right? If we have to emulate what the stock market did. And you can imagine that if we go down to these levels and then come back up, absolutely no one would believe that pump. Even if we hold at 40K, there's going to be a lot of people that aren't going to believe that pump either, because they'll just assume that there's no way it can go up. Like, it's just going to get sold off. Right? That's what they'll think. So I would say the first strategy that a lot of people do is they just DCA, right? And I DCA, okay? Another strategy would be to wait for the downtrend to end. If you're in a situation where DCAing on a periodic basis just doesn't make sense for you, because you might need that money for something else. You can't, you don't have the time frame to wait for things to recover. Then wait, right? Then just simply wait until the market looks healthier. I do think the market will look healthier at some point, but right now we're in a downtrend. Right? We're just in a downtrend. Some of the times it feels like, we're looking for things to find the bullish bias, but right now, it just looks like a downtrend, just like the summer lull did. It was back over here. It was just a downtrend, and it was easy to look for the bullish bias every step of the way. And then eventually it came, right? And then a lot of people didn't even believe it when it did come. So the argument, I think, to make here is that DCAing is, of course, a strategy. Waiting for the downtrend to end is also a somewhat valid strategy, or waiting for us to get back above the bull market support band. Okay, going back to say the fair value. So if we pull back up that fair value line, we came to the fair value back in July at a lower price. Okay, so, well, actually, the fair value was down here. So we didn't actually go all the way to the fair value, because that would have been at around $26,000. But we did come to the upper band of this fair value line. So if we had come to that point, to go to that point again today, it would actually be going just below 40K if we were going to go back down to that level. To go back to the fair value would be going back down to around 32K, and to go to the lower band would be around 26 or 27K. So that's essentially what we're looking at in terms of this downtrend, where we're trying to hopefully bounce from. Could it be 40K? It could. 30K. I do struggle to see going back to 10K. I don't think that's going to happen. I've been saying that for a long time. I don't think we're ever going to go back to 10K. Worst case scenario historically is the 200 week. Okay, so if we go back to the 200 week and spend time there, you basically argue the cycle's over at that point, right? So going back to the 200 week moving, technically we did go to the 200 week moving average here and here. But look, if we go back down to the 200 week moving average, which is below 20K, and then just do something like that, then clearly the cycle's over, right? Clearly the cycle's over. And we're in accumulation. Obviously there's people that are going to argue that it's already over, and they could be right? They could be right. But if it comes down here, that would actually be the best buying opportunity for Bitcoin that you're ever going to get. And it's going down to that 200-week moving average. This is just based on what we've seen historically happen. We did have a wick over here to the 300-week, but it was fairly short-lived. It only lasted a very brief period of time. So you guys know the levels. I'm trying to outline the strategies. I know people are somewhat frustrated with the market. But I do think there will be better times ahead. In the short term, I would say there can always be pumps. I'm not going to say there can't be pumps, but in the short term, I would say be prepared for further consolidation with a bearish bias at the very least. Okay, be prepared for that. If you're prepared for that and you can mentally handle that, then by all means, DCA to your heart's content. If you can't handle it, wait for the downtrend to be over. Could be a while. My guess, as I've said before, is that no parabolic Q1, very unlikely to be Q2, I think. By the time we get to Q3, I do think the market will likely start looking a lot better. Okay, by the time we get to Q3, and then by Q4, I would think for sure. But this is the way the market looks right now. So hopefully we'll come back to this video in maybe half a year, 6 to 12 months, and either see something like this will have played out, or maybe something like this will have played out. Right? This is what I hope. These are the two scenarios that I would hope to play out. Either we sort of hold it at around 40K, or we do have to have a major capitulation back down to the summer lows, maybe even slightly lower, worst case scenario in terms of keeping the cycle going. Of course, the worst case scenario could go below that if the cycle's over and we're just going to go into a full-blown bear market for a year or something. So that's what I'm looking at. Hopefully these strategies help you. If you guys like the content, give the video a thumbs up. If you hate the content, give the video a thumbs down. Make sure you subscribe to the channel, give the video a thumbs up. See you guys next time. Bye.